Well, hello folks, I'm L.A. Little and this is your weekly NeoTA Wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves just one question: what happened last week and what does it tell us about the coming ones? I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and available under the channel L.A. Little. You can subscribe anytime I push content. You'll be notified. It's a good way to keep up with what's going on, and there's plenty going on nowadays. If you look at what happened last week, down on the year, a little bit of a bounce. These markets are getting ready to try to bounce. Let's take a look at the indexes. I've got the weekly S&P chart up, and if we look at that chart, what you're going to see if you kind of zero in here on what's happening. You had a range that was in effect for a long period of time, right? And that range held and held and held until it finally broke. And when it broke in a big way. Not only did it break through one level and extend to another, it actually extended to two levels down. And so when you're looking at this market, you're really looking at three different levels, right? There was the original range, the range underneath it that it just sliced right through, and then the one that it's been digging around in for the last 4 weeks. Well, that range is coming back up to test again. Volume's picking up. Tried to test the bottom, got close, didn't quite get there. Doesn't have the volume, right? If you're looking at the volume tells. This market's ready to try and bounce and try to work its way back up into this range. And if you get back up there and you can hold over these bars, this becomes game up here. So that is the big picture. That's what the market wants to try and do over a longer period of time. Now, if we focus in on the strongest index right now, it's the NASDAQ NDX, right? The NDX 100. And that NDX 100, the big bar down is here, the top of that bar is there, and as you can see, it's back over it, gets under it here for about 4 bars, back over it, and it does more. And what it does is it gets back over the bearish retest regenerate zone, which is here. And so it's peaking over the top of that on the daily chart. And if we look at it on a weekly time frame, right there, you're going to see now the tells here are basically the same in that you had a larger range up here, and then you broke it down and you took it down to another range, and it actually cut underneath that and back up. It's coming right back to that point, right? You're going to try to get back over it one more time. And it depends on how you want to draw these. I think I've probably drawn it before, something like this, to where you kind of had 3 ranges. You can actually do it that way too. It hasn't spent any time in that lower range, just sliced down there and back up. And if you draw it this way, it's got a little bit farther to go. The bearish retest regen on the weekly chart is going to be the tough cookie to crack as it goes back up. That is up into this area. You can see that's where it pushed up to once before and had trouble. That would be the test again on the way back up. Now, if you really want to be totally optimistic, right, you could look at this and say, oh, wow, we got a nice big ABCD structure that can take us all the way to new highs. Well, yeah, that's possible, but, possible and probable are 2 different things. And so I really wouldn't start counting my chickens before the eggs hatched. But you do have a nice scenario here on the NDX. The NDX is the one that's showing strength. If we pull it over and look at it on a monthly time frames, still bullish, right? Nothing has changed there. We've gone down, we got kind of close, but we've gotten kind of close before. This was the big bar to test. Didn't quite get there. You can see that support zone is all set up there now. If you test and break this in the future, it's going to be a huge deal. But for now, this market's still working up on a long-term time frame, and that hasn't changed. That's been the case and is still the case. If we look over in Europe, most of this year, the European indexes have been the main index, right? And they've been the one that has influenced our markets the most. And if you look at it here, you can see this range that is set up down in this area. It came down, tested last week, and this is the DAX I'm looking at on the daily. tested this low and had absolutely no volume on that test. When you see that kind of a situation, this thing's going to try to flip around and go back the other way, and that is what it did the very next bar. Tried to fade back in there, still held. Europe, to me, looks like it wants to go back that way, and if that's true, that's going to also be true of the U.S. markets. Where would I find a big tail on this? It's going to be right into this area. I would think if we look at the DAX, right, you got this big bar, bottom is there. That to me is the key area that you have to be looking at. If you get over that, then you can get some juice back to the upside. So Europe, watch the DAX, watch how it behaves in those areas, because that's going to be a key area on a short-term time frame. If you look at it on a long-term time frame, actually an intermediate, you had the lows, you tested the lows, you don't have the volumes. This thing wants to flip around. If you look at it on a long-term time frame, you did have some negative on a longer-term time frame, and that is that you kind of transition. You really didn't transition, but you kind of said, okay, this market's not, it's not going this way anymore. It's going sideways, and the reason for that is it tested into this little retest, regenerate zone, was unable to hold above it. That's 2 bars underneath it. Well, we should say 2 bars. It's the beginning of this bar, so it's really just one so far. But if you hold under it for the month of October, right, that's going to tell you that this thing really isn't up anymore, but is more sideways, and that should change the way you look at that market a little bit on a long-term time frame. And if that becomes true, that's going to be another significant event. And we're always looking for these kinds of significant areas on the charts that give us a heads up as to what's happening, not only short-term, but also happening on the long-term time frames. Speaking of Europe, we can't ignore the euro, and as part of that, the dollar. On Friday, we had the employment number. That employment number came out. I'm on the daily here on the UUP. Came out much weaker than expected. Matter of fact, we've had more and more economic data that's weaker here in the States, which is mirroring what's happening elsewhere around the world. That dollar shot down on that open, but by the end, the dollar was back up, still inside this range, still trading up here and trying to find a way to make it back up to the top of the next range. Of course, it has to get over this area. This is the key area, but I would keep an eye on the dollar with respect to what it does in the coming days and weeks, because if the dollar can push above these price points, right, there's nothing but blue sky up there to the highs. If we pull this back, look at it on a weekly basis, you can see the same sort of thing. We've talked about it before. You kind of have the 2 ranges. You have the bottom one and the top one, and this dollar keeps playing around in this middle ground, doesn't want to give it up. Finally, on a long-term perspective on the dollar, nice big strike up, just working off the excess before it wants to try and go higher. Now, if the dollar is going to go higher, that says the euro is going to go lower most likely, since the euro is a large weighting inside that index. So if we look at the euro, what did the euro do? It pushes up, gives it all up, ugly looking bar. So you had a spike up, pullback, spike up, pullback, another attempt and pullback. What does that do? It sets up a bunch of swing point lows down here to be broken. If this euro starts to break these lows, look out, because it's going to come after the final ones up underneath there. Let's pull it back on a weekly. You can see those there. The big spike would be down around that 100 mark. If it breaks par, it's going to be a huge deal. It's going to be a huge deal not only for the euro, but also for the US dollar. And finally, if we come back here, on a long-term time frame, if you just take a broad look at this thing, right? This thing has worked its way down, and then even on a straight line move, working off that excess now. This thing to even just retest regen would be up here on a bearish basis. In other words, we could see it move up to here, and it still would be a weak position. Euro looks to me like it wants to go lower. That should help the European markets, but right now, nothing seems to be helping the European markets in a big way. I suspect a stronger dollar, weaker euro in the short to intermediate term time frame is going to help that German market, the French market, and the rest of European markets try to head a little bit higher. The other piece of a stronger dollar is it should play havoc on commodities. I've got the continuous commodity ETF up here. You can see this range, and inside that range there's kind of a middle ground. It's in the top half of that middle ground. It's going to try to get up to the top. If the dollar stays within the boundaries of what it's already set, in other words, if it continues to kind of drift around, then these can work higher over the short term. And the only reason I say that is not because they're strong, but because they've been so weak. So if I go back, pull it back, put it on a weekly basis, you can see the push down, a little bounce, another push down. So it's been extremely weak on this time frame, and on the long-term time frame you can see it even more clearly. So if you have that much selling that's already taken place, right, you can get bounces out of those things just like you've seen before. So if you look at this, a little bounce here, if you look at this, right, a little bounce back up here really wouldn't mean much, but 22 on this particular commodity ETF would look like a big deal. 22 on a short-term time frame. 22 would take you over the top of this chart. And so you can see what looks like a small bounce on a long-term time frame is really a huge bounce on a short-term one. We're talking 10% if it was to make that kind of a move. So if we take that and we use it as a segue into an area that almost everybody loves to look at is gold. You can take the same ideas here and you can use them in the same way. In other words, you have a range inside the range. It's testing that area now. If it gets over it, it's going to try to go to the highs. This is on a short-term time frame. If you pull it back and you start looking at it on a weekly, you can see the swing point low up here around 1645. And then again, if you pull it back one more, you've got the highs, or excuse me, the lows here at 1645. So again, you can see that the extra move, if it was to make the 1645 move, that would take it back to these highs. That would be where significant resistance would lie. But 1645 is $2. $2 on 14 is 15%. These are huge moves that can take place and still be nothing more than a bounce in a bearish move on the intermediate and long-term time frame. So don't be surprised if you see some significant moves. Don't get so excited if and when they take place. Take advantage of them, but don't be so excited, thinking that, oh, it's a new bull market. It may or may not be. And in fact, I suspect it won't be. It's probably going to be a death by 1,000 cuts, which is what I wrote about this past week. If you come over to the front page and take a look, you'll see it. Essentially, I was saying, hey, you can get some big moves, and they really won't mean a lot. So take a look at that article on the front page if you got time. As far as, where we go this week, or what happens last week, we had more bad data, and they bought the market, and they tried to take it up. And they actually did keep it from going down, I should say. Didn't get a big move up, but you didn't go down any farther. If I take and pull up the S&P 500 again and use it as the proxy, to look at the market in a general way, you've got a swing point high here. It's got volume on it, or it actually has volume off the top on the next bar. That was the Fed bar. That was where they reversed it. So where would they try to take it back to? Well, you have to think this area right here. That's this prior big bar, and you got this overlap here. So again, if we kind of look at where is important, it's right there. That's where it's coming into. That's where it's probably going to try to attack, and that's where I would think it's going to have trouble. Now, if you can get over that, through that some way, right, you can make it back up here and finally do that retest, regenerate. How would you do that? I suspect if you're going to do it, you're going to pull up there, you're going to come back, and then you're going to work your way back that way. So some sort of A, B, C, D structures to get there. I also expect it's probably going to take time. October, calendar turns, third quarter's out behind us now. Fourth quarter, they're trying to get on top of this early. That's what they've done. They bought the last couple days here. They're pushing for something to get them back in the green. We'll see how far they can take it. My take is you can get a bounce. You probably will get a bounce. You got earnings coming up. It's the next catalyst. That starts next week. You actually have unofficial earnings starting this week, but it's really going to be next week that the meat of it starts up with the finance or the financial companies. So my take here is you could do one of two scenarios. You could push up into it, or you can just kind of go up, back down into those earnings, and then maybe get to push on the earnings, right? You could go either way. So it depends on what they want to do. I don't have a strong feeling. After seeing 3 days of weakness being bought, though, I suspect there's going to be a huge attempt to take this thing higher, and I also expect that they probably will get it higher over time. So, my take is expect these markets to push up and see some larger gains, and those larger gains are eventually going to turn into just bounces within a larger trend on the downside. That's it for tonight, and thanks for joining me. Tell a friend, tell two. I'm LA. This is and was your weekly NeoTA Wrap. Have yourself a great night, and I'll see you next time.